So where do we sit right now? Because just recently there was a report that the global bond index lost 2.6 trillion in valuation as it in a record slide from its peak. Where does this set us now for the rest of the year?
That might be over. Where if rates are going to go higher, there might be this sell off in bonds. And getting to that question, essentially, like, what does that mean in? I don't want to say it's short term, really, but you have to sort of look ahead. And again, remember the bond markets are the largest markets like in the world. It takes like billions to trillions of dollars to make these moves. And these moves, to us stock traders and currency guys and crypto guys, it looks small, but in terms of the amount of money that's required to move markets like this, or the credit or bond markets like that, it's quite substantial. So what people are talking about, and I've actually written about this on Monday of this week, the yield curve, it's signaling economic uncertainty for now. And an inverted yield curve is what would basically signal a recession. So essentially, the way it works, I have a definition here of the yield curve. It's a line that plots the yields or the interest rates of bonds having equal credit quality but differing maturity dates. And the slope of the yield curve gives an idea of future interest rate changes and economic activity. You want it, right? You want it to be normal, right? Which is an upward sloping curve. If it's inverted, it's downward sloping, which means the short-term periods are yielding higher than, say, like your long-term period. And then, of course, you have a yield curve that goes up and then just basically goes flat, which is essentially a sign that there's some economic uncertainty. So right now we have what would be a flat yield curve. And, if we take a look at the yield curve right now, actually, so here I have the 1 month, 3 month, the 1 year, 2 year, going down the line here. You can see here that the 20 year is actually yielding more than the 30 year. So that's already inverted. You see the 7 year is actually yielding more than the 10 year. So that's already inverted. And there was like the 3 and the 5 are just like 3 basis points away. So, it looks like we're getting closer to an inverted yield curve. And for me personally, the big trigger is actually that 2 year and the 10 year. So right now we're about 20 basis points away. At the beginning of the year, we were actually 60 basis points away. So it is actually narrowing now. And the difference between the 2 and the 10, that's usually what people sort of look at for a recession trigger. So the funny thing is, the Fed might be raising rates, but they might be causing a recession while they do so, because as inflation, still continues, and now borrowing money and credit becomes more expensive. Think about Canada. I think like 85% of the population here has variable mortgages. So, their expenses are going to also rise with rising interest rates. So it might become a situation where, the world is, or America, Canada, a lot of, the Western world is used to low interest rates, that the Fed, just by raising, by 50 basis points or 25 basis points, is already causing the yield curve to begin to invert, which sort of shows you how much debt there is and how much people rely on debt. And before we end with the yield curve here, I have this graph here. It might be a bit difficult to see, but really all I want to show you is this is basically the 10-year yield minus the 2-year yield. And basically, if it crosses this red line, you're now in an inverted yield curve. And this inverted yield curve has called 10 of the 13 last recessions, like going back to the 70s. And you can see here in the last 4 times we've had the yield curve invert. Back in the early 90s, we had the recession, we had the dot-com bubble, we had our great financial collapse in 2008. And then actually, in 2019, we had a yield curve inversion. So it was a signs of weakness before COVID came. And now we are drifting back to that,
What do you say
inversion.
to
Right?
analysts like at JP Morgan that say that they don't think an inversion is going to happen. They're just hot on stocks.
Yeah, yeah. I
Is
mean,
this burying your
that,
head in the
that's
sand, or is this actual legitimate criticism?
so. I mean, the thing is, like, no one really plays bonds anymore, right? Because all the fun is in the stock market. As long as the stock markets are moving higher, you're going to be putting your money there basically for yield, right? The way I'm looking at the bond market is, say you're buying a bond right now, yielding at a 10-year bond, yielding at, say, let's go to the 10-year, where is it? 2.47 here, right? Again, there's something called a nominal interest rate and the real interest rate. So, when you're, and it works for like our saving accounts as well, right? So essentially, if you buy a bond, it's yielding 2.47. But if you actually look at the real rate of inflation, subtract this, right, the 2.47, you're still technically losing money, right? Same thing like us, if we have money in a savings account.
So what?
Obviously, inflation in Canada is like, what, 7% or something?
Sorry, Vishal, what does this mean then for your average Joe? For instance, Maddie, up at the top of the screen there.
Right.
How is this yield curve and its inversion going to impact her as an individual citizen and also as a small-time investor? What does it mean for us?
Yeah, so I mean, for the way I'm looking at the yield curve is if there is going to be a recession coming, right? If this does actually invert, the Fed may actually have to start cutting rates. So they might actually have to pause, the interest rate hikes that they're doing, and they might need to start cutting interest rates. So that's why, a lot of I want to say the contrarian guys, right? Because, a lot of us guys who are into gold and say silver and Bitcoin, we're all contrarians. A lot of us think that the Fed will actually be the ones to cause the recession themselves just by raising interest rates. So we're looking at maybe like that 1% zone. So we're at 0.50 right now. So when the Fed maybe takes interest rates up to 1%, what is that going to do, right, to the real economy? Like, for example, that 1% is not going to stave off inflation. So inflation is still going to run rampant. But now, if you own a mortgage or if you have any sort of credit, the rates for that are going to go up, and it might actually cause people to start saving, money, right? If to cope with much more expensive things. So they're going to spend less.
What would you recommend, for instance, for myself, for Maddie, for Joseph, just your individual people on the street? What would you suggest we do? Do we try to go into the stock market because it seems pretty shaky right now? Or do we believe in bonds and think the yield is going to bounce? Or do we just put our money in the bank and go, fucking forget it, man? Or actually just take it home and put it in the mattress? What do you think?
So, again, it comes to the fact it comes down to that inflation idea, right? So the whole idea of raising interest rates here is trying to tame that inflation. But, the reality is the Fed will have to raise interest rates much more than 3% to tame inflation, right? Like, again, the last time this happened, and it's funny because if you look at this chart here, I don't know if you can read that, but the early 90s recession as a result of an oil price shock and too much debt, back then we raised interest rates closer to double digits, right? In order to deal with that inflation. But I don't know if, the economy can withstand double digit interest rates because of, how much debt there is, for example, and it not just consumers, right? But we're talking about government debt as well, right? Like I don't know how many.
Correct.
Yeah. Sorry.
And corporate debt as well, correct?
In a way, man, but corporate debt is much more expensive, right? That's already junk bonds, right? Okay. So they're already paying like a 12% interest rate or 10% anyways.
Would it impact it at all, or is it just going to be its own animal?
I haven't taken a look at junk bonds actually. Let's take a look here at JNK. So this is the high bond yield. So yeah, it's moving together. So as long as JNK moves lower, that means the yields for those junk bonds are also rising as well. So there's basically no idea to buy corporate debt right now because they're going to have to raise the rates for the future bonds that they basically put out, right? The future junk bonds that they put out for investors to buy. So yes, the yields are increasing. So basically investors are now demanding higher interest rates on corporate debt. So it will, yes, impact your corporations as well, who do choose, right, to try to make money by selling bonds, right? Because there's other ways they can do it, right? They can always do a share, increase the amount of shares they do and stuff. So there's always other options, I guess, for corporations to raise money. They don't necessarily have to issue bonds, right? Corporate
Right. They
bonds.
can do equity raises, right? They can just
Exactly
issue
right.
more
Yeah.
shares.
Yeah. Yeah.
Now,
So
what about
yeah.
governments? The Canadian government just recently talked about issuing a green bond and is now actually, I believe, dumping the yield on it somewhat. Like, how is this going to affect the environment for these guys? Are they going to
So,
start losing the capability to raise cash?
yeah, so that's the big question, right? That's why a lot of people are claiming like, okay, the U.S. government is sort of the focus, but obviously the Canadian as well, right? Because we're all, I think, in deficit, so we all are borrowing money. Essentially, if interest rates are rising, that means governments have to pay more for their debt as well. And usually the way they fight that off is well, technically there's two ways, right? They can either borrow more money to pay that off, which sort of creates more inflation, or they can raise taxes, and usually it's the middle class, right, that gets the brunt of the taxes, which would in a way sort of slow down the economy, right?
Now,
So it would cause
would
a
you consider
recession.
that there's a sizable enough middle class to actually make that move effective, or have we
I don't
eliminated
think so,
enough?
man. I don't
Yeah.
think so. That's why it is like, this whole idea of are we trapped, right? Is this like what tools does the central bank actually have? And this is the whole idea is like, is this the end now of Keynesianism?
Now, speaking of all of this yield curve stuff, um, uh, sorry, Maddie, I'm just sort of walking in here. Do you have any questions, Maddie, by the way, in regards to what we were just talking about?
Not right now.
Okay.
It just all sounds like a little
Esoteric?
doom and gloom.
Oh, doom and gloom.
I mean, see, the thing
Okay.
about the bond market is it is sort of like this because no one pays attention to it, right? Because it's sort of this boring market that doesn't really move. And I mean, I was born, well, I mean, I was born in '89, right? But basically for me, it's like most of my adult life, it's always been low interest rates, right? There's never been any thought of interest rates ever going above 5% per se, right? Or double digits
when
here
I
in
was
Canada.
growing up, I could actually get 10% interest on my bank account on a fucking penny if that's all that I had in there. Like
Exactly,
that
yeah.
and it was compounded.
Yep.
Whoa, those days are
10%.
long gone.
Yep. And see, this is the idea, right? It's like with low interest rates, instead of saving money for 10%, you had to take more riskier investments, right? And this is why personally, I believe, and a lot of other people believe that money's been chasing yields in stock market and in real estate, right? Because those are the only places to make yields anymore. Back in the day, say, I was Galen's age or whatever, and if I was about to retire with a few six figures or $1 million
Wait a
bucks
minute, I'm
after
not that
working.
old.
Well, okay, maybe for a
Jesus.
bit older than that, but let's say like before 2008, right? If I was about to retire before 2008, say you saved up like 500K or $1 million bucks or whatever, you could buy government bonds yielding over 5%. So basically, every year you're making somewhere between $50,000 to $80,000 per year just on your investments, on safe investments, right? Because governments technically don't default, right? Because they can just raise more taxes to make money. But essentially, that's a reasonable amount to live off of when you're retired, right? 50 to 80K. Yep. Nowadays, if you do that sort of idea, like of buying government bonds, you're making probably less than $20,000 per year on $1 million bucks, right? Or just under 30K. So a lot of this money, right, has been running into either stocks, but when the stock market got too expensive, sorry, let me reverse that. A lot of that money instead of bonds went to real estate because, when you're about to retire, back in the day, and when I mean back in the day, I mean just a few years ago, your financial advisor would tell you, hey man, you're 60 or you're 55 or you're 65 and you're getting close to retirement. You shouldn't be buying risky stuff like like stocks. You should be buying the next safe asset, which is real estate, right?
Yeah.
So a lot of this money went into real estate, not just in Vancouver or Canada, but pretty much most of the world, right? And now you're at this point where if you're about to retire, you walk into a financial advisor, they might be like, oh, you can't really go in bonds. Real estate's pretty expensive and the property tax is pretty expensive and all these costs. Hey, man, you got to be in the stock market, right? So this is what's happening, right? Like because of this low interest rate environment, people have to go into these riskier assets rather than, I would love to have a saving account of 10%, right? I could keep my money there. I think a lot of us would be happy with that.
It was some
But
good
rates
days,
have
man.
to.
Those were good days because I'd actually see a return on my money.
That'd
It's
be
like
so
in real
reassuring.
time. Oh
Yep,
yeah, it
yep,
was. Now,
yep.
just a quick question in regards to what I just said. Do you think the shift in getting interest from a bank, and talking about the negative shift, started to happen when banks got out of banking and started getting into investment?
So that's
Because
like
it seems to me
like
that there's a bit of a
yeah,
correlation, because in and around
yeah,
that time where I started getting that, well, it started when I
yeah,
was getting that 10% interest, banks were just banks, boring,
exactly.
not
Yep,
doing anything
100%.
other than just holding on to your cash and
Yeah,
investing in long-term funds, not doing anything else. But now that
yeah,
they've
yeah,
become so speculative,
yeah.
do we think that that's probably the reason why we've lost all the interest rates that we get usually on our bank accounts?
So there is this like big debate on that, right? Like basically the way money is technically printed, right? It's through money credit, right? So
Okay.
essentially, these banks have accounts with the central bank, and they have reserves that they have to keep with the central bank. But basically, when they create credit, they create money, right? So it's essentially these banks are the ones that are creating that credit. And a lot of people talk about QE, which was used to basically prop assets up. And essentially, the idea was that these banks would have the money and they would lend more, right? So they would give
Gotcha.
money to the middle class. People would borrow more money to invest in the real economy and do things in the real economy.
Right.
But that didn't really happen, right? Because the real economy was never actually fixed. Like that it goes back to this whole idea of productivity versus financial engineering. So yes, just like you said, what these central banks did, well, sorry, not what the central banks did, but what these banks did was, instead of doing their regular and normal business, which is lending money, and basically, in the old days, say you were going to open up, a hot dog stand or whatever, and you wanted to borrow money, you would go to your local bank, and there'd be someone, that would look at that information and sort of walk you through why they would lend you money and that kind of stuff. So that was like real banking. Whereas nowadays, you can't really go to a JP Morgan office. They're going to be like, a hot dog stand, man, just
Yeah.
get out of here, right? Like go to
Exactly.
your, so that was the real banking. We don't really have that now. And what they've done now is, yes, as you said, right, they make more money investing in the stock market.
So they're not
So that's
interested in
why
you
all
unless
this,
you're doing an IPO.
exactly. So that's why all this money that was printed, a lot of people are asking where that inflation go in 2008 and stuff. A lot of that money didn't actually go into the real economy. It went into assets, into the stock markets, and into real estate. It never really trickled down to that normal person, that middle class, because the bank's excuse is the real economy was broke and no one in the middle class wanted to borrow money to do things. And you can even say the same thing with the corporations as well, right? Where instead of taking their money to reinvest in the real economy, because the real economy is already basically dead in their
So they
opinion.
just did share buybacks, basically.
Exactly. Yeah. Yeah.
We
Yeah.
have just under 10 minutes here.
Oh,
So
man.
I
Sorry.
want to shift gears and ask Joseph about Bitcoin and the ruble and your thoughts on that.
Well, I think it's actually a pretty good bet for the average, I don't know, the average Russian citizen to take the money, take their, the wealth generated in the ruble, and put it into a decentralized coin like Bitcoin. Now, it's got other problems, primarily because Bitcoin is very transparent, which means that when everything goes back to normal, the Russian authoritarian types are probably going to get their hands on a block steer, and they're going to find out where their weak links are, because they're going to look in at traffic flows on the Bitcoin and see, oh, this person with this particular account, and we know exactly who that is. They did not support us during our time of trouble. They took all of their money and they put it here in this currency, which we can't influence. So maybe we will watch them in the future, and maybe we will not be so inclined to be as loyal to them as they were to us during our time of trouble. So, I get it. You want to save your money, and the ruble is going to shit. Sanctions are causing Russia's economy to tank, and you got to find a way to protect that. I mean, you work hard for it, all your life, and then suddenly, the asshole in Moscow decides that he wants to start a unmitigated conflict. against the foreign power, and naturally the international community is all up in his grill about it.
Can I ask you a question, Joseph? I mean, I mean, you might not have the answer to this, but want to just ask this. Maybe Galen can answer this too. But let's say, as you know, from a Western perspective, so say I'm a Bitcoin investor. You know, I want to buy Bitcoin or hold my Bitcoins here. Let's just play out the scenario. But let's say Russia does start accepting, right? Because right now it's this might. They're considering, selling oil and gas for Bitcoin. But let's say they do. They say, yeah, sure. You know, we will now start taking Bitcoin for our assets and stuff. Because we're seeing this tit for tat, right? You know, Russia now saying we can only take rubles. The European Union saying, okay, now we're gonna, buy LNG from the U.S. Could the reply from the U.S. side or from the Western side be, hey, now we're gonna have to introduce certain regulations on Bitcoin just to see or make sure the Russians aren't doing anything fancy, with some of these crypto exchanges here? Is that something to be worried about? Or
I'd count on it.
Yeah, absolutely. I mean, I think to a certain extent, the idea that Russia is considering the Bitcoin, for me, the machinations behind that would be mostly that they could destroy the petrodollar, and not have a currency that can be internationally sanctioned on. Bitcoin seems to ride outside that sector. However, as Vishal had said, the reason why Bitcoin resides outside that sector is because it is unregulated. But if the Americans, who now produce a vast quantity of all the Bitcoin mined, are going to crack down on it and start to regulate it in and of itself and say that, no, you can't do business with Russia with this coin. You're going to have to move elsewhere. Now, does that preclude them from going to a different cryptocurrency? Probably not. Will a cryptocurrency maintain its stability enough? I mean, ruble aside, yeah, we're going to hammer it most likely to introduce economic sanctions against the country. But will a cryptocurrency provide the stability necessary to make that kind of a grand transfer? So my thinking now is that perhaps Russia, this is bafflegab and basically just trying to illustrate the instability of the American dollar and its hegemonic position on the planet as a reserve currency. I don't know if they're serious enough to actually move to Bitcoin at this point.
If they were serious, they wouldn't be talking about Bitcoin. See, Bitcoin grabs headlines, but for the most part, that's all it does. Now, if Russia was really serious about bolstering its economic position and moving over to a cryptocurrency, it would probably start looking at a privacy coin.
Okay.
Look at something in which it's not quite so easy to look into the blockchain and see what movements are being made. Now, I'm not talking about Monero. Monero is too volatile. Yeah, you went right to it. Monero is far too volatile for what they want. So is Dash. So are a number of the different floating kind of cryptocurrencies you'll see. What they start looking towards is either the only existing privacy-backed stablecoin that I know of, and or potentially even making their own. And it is possible.
Right.
Like a privacy-backed stablecoin would be, it'd be a place to put their money in which they could float it. It would be a place for countries and other such qualities looking to do business on a global scale, to put their money to do a completely anonymous exchange and bypass sanctions in that way. Whether or not they'll do it, there are a number of different issues with the nature of a privacy-backed stablecoin, namely that there's only one that I know of, and it's really not big enough. It doesn't have the market cap required to handle the kind of cash flow which would happen between states. But that doesn't mean there isn't going to be one in the future. In fact, it's a huge market for it. I don't see why.
I've got a question here from one of our viewers, TK, in fact, saying with India and China buying up oil from Russia in their own currencies, would it be smart for investors to shift to other currency denominated assets like the yuan and the rupee, ignoring crypto and the US dollar?
Yeah, so I mean, see, that's the thing, right? The thing is, though, those contracts, though, with India and China, like they're going to be a mechanism that's going to be basically what do you call it? It's going to be dealt in rubles. So essentially, the swap's going to happen, and all the contracts are going to be what's that word, man? I'm having a brain fart here, but it's all going to be transacted in rubles. Like that's going to be the final transaction. So a lot of contrarians are actually looking to buy the ruble, believe it or not, because
So sorry, I just because I tuned out for a second there, I apologize. My bad. So even though China and India are purchasing in their own currency, in the end, it's reverting to the ruble. Is that what you said?
because the Russians, so right now the Russians are, basically India is working with Russia for a rupee to ruble like transition, right? So
Gotcha. Okay.
yeah. So India doesn't necessarily, I mean, Russia could take rupees if they want, but I think right now they want their own rubles. And actually, believe it or not, they can actually take, they're not going to take dollars though, but they can maybe take euros still, right? Because this whole idea of rubles is only the hostile states. So, I mean, the Russians are probably going to take US dollars because the Americans can just, freeze it or sanction it if they have dollars. So the Russians are open to take euros, I guess, right? If India or China wants to transact with euros. But right now it's going to be rubles. And yeah, the India thing was essentially rubles. And, we talked about this, I think 3 weeks ago, but when Putin went to China, during the Olympics, they signed that huge gas deal, like 300 billion, and that was signed in euros,
wasn't it? Or was that euros?
Euros,
Oh,
yeah,
sorry,
yeah.
yes.
So that was a huge sort of sign, right? It was like, hey, wait a minute, like the Americans were like, you're supposed to be signing that in dollars because every energy transaction in the world, any commodity transaction in the world is done with US dollars, right? Hence the PetroDollar, that's what we call it that. But the Russians basically sort of set out this little channel, I guess, to the Europeans saying, hey, look, we're doing this with China for euros. So if you guys want to pay, use your euros to buy our gas, we'll take it. And then obviously now, it's probably not going to go that way, but we'll see. Like the whole idea, this whole thinking is, does Russia need Europe more or does Europe need Russia more? And a lot of people are thinking it's actually Europe that shot themselves in the foot here. It's Europe does
it's geographical proximity, also sort of a cross-cultural blend as well. And the getting the gas from America is going to be quite expensive.
Very expensive, especially in a couple of months' time, because obviously the gas isn't coming right away because it's going to take. The Americans are saying by next year winter, the LNG terminals and everything will be ready. But what I'm worried about is by that time, inflation's already going to be crazy, right? There's already going to be rising prices for tons of stuff, and the European middle class person is going to be like, "What now? My winter gas is what 500 euros per month when we were on Russian gas, it was less than 100 because it's much cheaper, right? That's just how the Russian gas system works. It's very cheaper just to transport as well through the pipelines rather than getting it on a ship in America, freezing it, transporting it across the sea, and then unloading it into a terminal. And then
for Europe, any other options other than getting the gas from America and Russia, of course?
There was the talk, right? Remember Qatar was making that pipeline?
Yes.
But that's why technically the Russians moved into Syria because that pipeline had to go through Syria, and the Assad government was saying, no, we're actually working on a Russian-Iranian pipeline, and then that's probably why we wanted Assad out, right? So then, when he's out, the Qatar and Israel could build their gas pipeline, which would come up to the southern part of Europe, and then, we could rely on Qatari, right, gas, but that's why the Russian army probably moved into Syria to make sure that doesn't happen. There's also the BTC pipeline, and it's not the Bitcoin one, but it's Baku, Tbilisi, and it's a Turkish city that starts with a C, like Katagan. I can't even pronounce Turkish words, man.
Yep.
But I can probably Google that. But there's also that pipeline as well, right? So the not BC, BTC. Pipeline. There we go. Baku, Tbilisi, Ceyhan pipeline. But I think that's that's not gas. That's crude oil. My bad. That's crude oil. So yeah, I mean that's why, right? A lot of people say, right, the Russians are they played this chess game where they have Europe trapped essentially, and Europe now has to go to America and pay much more expensive. And there's a lot of people claiming that by winter next year, the Germans will say, hey, sorry, America, but we sort of need the Russians here, and we're going to buy the gas. And in the meantime, the Russians are going to be basically looking to Asia because India's buying a whole bunch, China's buying a whole bunch. Not only that, but even the Japanese and the South Koreans are sort of saying, oh man, we signed these long-term contracts with the Russians. Their gas is much cheaper. We're in the middle of building this project. And the funny thing is, because of the way the prices are of gas and oil right now, the Russians can actually sell less oil and less gas to Asia and make much more money than they did before in Europe. So geopolitically, it looks like Europe has sort of committed a suicide.
Oh,
Yeah.
on that
They're fucked.
minorly
I'll say that.
stressful note, we are out of time,
Yeah.
but we will be back same time next week. Thank you so much for watching, and I'll see you guys soon.
Awesome. Thank you.
Bye bye.